Hi, my name's Huw Davies. I'm one of the co-founders and CEO at Ozone API, and I'm delighted today to be joined by the one and only Mr. Open Banking, Eyal Sivan. Eyal, perhaps you can start by just saying hello and tell us who you are and what you do.
Sure. Great to be here, Huw. Thank you for the invitation. I'm Eyal Sivan. As Huw said, I'm also known as Mr. Open Banking from my podcast of the same name. I'm also proud to be the VP of Open Banking and Smart Data at Raidiam, the company that powers open banking's most trusted data sharing ecosystems, and not just in the open banking space, but in fact in payments, ID, and anywhere where a number of participants in an ecosystem need to securely share data. I've been in IT for over 30 years, which is hard to think about. I discovered open banking in about 2016, decided to ultimately leave my long-time job at a bank to dedicate myself to the open banking movement.
Yeah, and we've certainly had many conversations in the intervening years. So no, thank you again for joining today. And so, I mean, open banking is now becoming a global phenomenon. It's happening in so many different markets, and as it is, we're seeing a lot of fragmentation with each market doing it in slightly different ways, different regulatory frameworks, different standards emerging, which is why we created the global open data tracker, and we're doing these conversations to really talk to experts around the world and get a sense check on what's happening. And this is a really timely moment. So last week, from the point that we're recording it, we had the much awaited announcement from the CFPB in the US about the next steps for open banking there. Eyal, what are your views? What did you think about what came out? Was it in line with what you expected?
Yes, I think it was in line not only with what I expected, but with what the industry at large expected. Director Chopra and the CFPB have been signaling for quite some time now that they intended to move on Section 1033 of Dodd-Frank, which guarantees a right to consumer data portability within the financial sector. Unlike other regions who do a lot of talking and write a lot of reports, the CFPB has been quite clear that they wanted to move aggressively on this file. In original announcements, and those weren't even the first, came out at last year's Money 2020 when Director Chopra took the stage and had some quite pointed words for the industry in terms of being more fair, leveling the playing field, opening it up to competition. In the intervening time, there's been a lot of back and forth within the US financial sector, notably between various flavors of aggregators. And with the release of this rule, they have made good on their promise to activate Section 1033 of Dodd-Frank. And now it's not an official law just yet, but the timeline for responding is very narrow, with December 19th being the deadline. And it's widely expected that the rule, with any luck, becomes enforceable before the end of the election cycle. So it is very exciting. It's great to see the CFPB do what they said they were going to do. In terms of the material contents of the law, rather the proposed rulemaking, I should say, it's going to be fascinating to watch how the market reacts, because unlike other regions, he does point a finger at the market and says you're going to have to play a significant role here.
No, I think it'll be really interesting to see how it plays out. And I mean, it's certainly a hot topic at Money 2020 this week, and it seems like it's really fired the starting gun on the market moving towards, I guess, a more structured implementation of open banking. But it will be interesting to see what that looks like, because as you say, it's starting from a different base, and I think there'll be a real role for the market to define the delivery approach. I mean, you got any thoughts in terms of what this might look like? Will there be a common standard emerge? Will it be FDX as the front runner? Are there any sort of significant differences we may expect to see in the makeup of the ecosystem? It's maybe early days, but what do you think, Al?
So FDX has enjoyed enormous and continuous success growing the adoption of the standard. It isn't at the level that you see in mandated regions, obviously, but they are at 65 million records. By the numbers, that's more records being shared than most regulated open banking regions. So while the market continues to be fragmented, and we'll see what effect the ruling has on gravitating towards a common standard, I don't think there's really any other players other than FTX. At 65 million records shared and growing, the membership continues to grow. There really isn't another option. You don't see anybody else showing up in the U.S. market saying, "Oh, I have an alternative standard." Now, there's two wild cards there. One is whether or not incumbent aggregators such as the Plaids and MXs of the world will stand up and say, "Look, we've got a way to do this as well, and we propose another standard." And you may end up with 2 or 3 different standards, depending on how exactly the access to the different parts of the market shake out. But the other wild card is FTX themselves. As an organization, they're going to have to do a lot of rethinking on their governance processes, their board structure, and the way they approach the passage of standards in general. FTX already does an outstanding job on being a highly democratized organization. They do their best to make sure they are member-driven and that their larger members do not have an outsized voice. However, the regulation coming out of the CFPB is quite strict in the standards it's going to hold the standards body to. It requires some very particular things, and Director Chopra has not minced words around his concerns around monopoly power and having large incumbent banks hold the market captive and own the open banking infrastructure. That puts FTX as an organization squarely in the middle. They're going to have to make sure that they meet the CFPB's requirements on the one hand, but also meet the market's requirements on the other.
And yeah, it'll be interesting to see how it plays out. But I agree with you. We've, as you have, been involved with the FTX organization around the table for a long time. And the one thing that has been fantastic is it's been developed by the industry for the industry and has representation from all sides of the ecosystem to create a standard that really works. So yeah, it'll be interesting to see how the market shapes up. So I guess the firing gun has started. Quick question. What do you think? Where do you think we'll be? Do you think we'll be right in implementation cycle this time next year? And do you think there will be a completely sort of live and regulatory driven ecosystem this time in 2 years' time? It seemed to be the sort of timescales. Do you think that's going to be realistic?
I can only hope. Huw, we've spoken many times. You know me as an undying optimist when it comes to open banking. Those who listen to my podcast know that I really go all the way with the optimism, and I think that's the way this movement should be approached. So let's take the optimistic view. If everything goes according to plan, the feedback will be received before the end of this year. They will need time to incorporate that feedback. So by Q1, Q2 next year, you're looking at the rule becoming official, which is to say you're going to kick off a compliance cycle. So you're going to see a lot of building next year. 2024 is going to be the year that banks in the US are going to shore up their API infrastructure. Somehow the market is going to figure out exactly what they're going to do in terms of building out trust within the ecosystem, who's going to run a directory of registered participants, who's going to provide the accreditation and certification capabilities, what exactly is the relationship between the regulator, a standards body like FTX, and players, whether they be Akoya on the one hand or Plaid and MX on the other hand. All of that has to be worked out. Now let's presume that they do work it out. You're looking at about 6 months for the biggest tier for the build. They might ask for an extension, let's say, but that means that by the end of 2024, they're going to have systems up and running. And if the CFPB is true to their word, that means 6 months after the Q2 cycle, so you're looking at Q4, they're starting to go around and enforce the actual ability for the banks to share data based on these open standards in line with their ruling. That means by 2025, you have a running open banking system in the US with a longer tail coming on board throughout that year. Now that's if everything goes smoothly. Let me for a moment go the other way and take the more pessimistic view. They are about to enter what could be the most rough election cycle that they've experienced in a long time. I'm not going to belabor the political turmoil that's going on in the US, but that means that anything can happen. If, for example, the rules are delayed further into the year and they hit the election, the entire thing could get scrapped. The CFPB itself is under threat of losing funding. The build itself involves a lot of complexity, as we both well know. So you may run into issues with misunderstandings around how standards work, how the security aspects work. So there very well may be the best of intentions, but technical issues that come up make it very hard to complete the build. So there's a lot of things that can go wrong. There's a lot of existing incumbent players, both on the fintech side and the bank side. There's a lot of lobbying that happens in Washington, and we're going into an election year. So as much as I love to be the optimist, I think it's going to be rough seas out there. I think it is going to be a bit of a mess, but at the same time, there is a certain bipartisan aspect of open banking where even if you differ in many ways politically and you're on either sides of the aisle, there's few things that bind the two sides together more than saying, look, we have to do right by people. We have to do right by consumers. We have to help them. And we don't like monopolists, whether they're tech monopolists or bank monopolists. We don't like them throwing their weight around. Americans love free market dynamics. Americans love competition. And I think that that is something that extends, unlike most issues, it extends across both sides of the political aisle. Rarely do you see an issue like that.
Yeah, I think it's really interesting. You used the sailing analogy and rough seas. I was thinking headwinds. I think there are a few things to work through, but I also remain a huge optimist. And from the conversations I was having at Money 2020 this week, it feels like things are starting to move. One thing you mentioned build. I really hope the approach from the market isn't for everyone to try and build it themselves, because we know we've seen that slow, complex, cumbersome. Hopefully the answer will be to work with expert organizations like Raidiam and Ozone API to make that all much more effective. But listen, thank you. This has been a really fascinating conversation. So Eyal, we'll leave it there, but thank you very much.
Thank you, Huw. I hope your audience enjoys it.